Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is December 4th, 2015. It is 8:22 a.m. Eastern Time. We're about to see what happens right now with non-farm payroll. But before we do, let's go to the disclaimer real quickly. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this presentation. Our website, past performance indicators, or methodology are not necessarily indicative of future results. So, being that said and done, good morning. Welcome all. It is Friday. Thank God it's Friday. Non-farm payroll today. Everyone is expecting decent numbers for employment here in the U.S. Canadian unemployment is also going to be coming up, so it'll be a very, very interesting morning. As always, they like to keep everyone in suspense. So far, I mean, it looks like they're going to be coming down, but can't really tell, you know. I would say do not trade right now. Keep your shirt on, because you never know how they're gonna play it. Here we have a signal saying short, so it'll be interesting to see if that actually plays out. I don't recommend you take any positions right now. I believe that it's going to be a little bit hectic, but we're getting signals to go short on the euro. Let's take a look at the pound dollar, and then we'll give a quick look to the yen and see if that's the case. I'm marking them just to see based on the signals that we're getting. Hopefully all of you have had a good week and a good month last month. Non-farm payroll has become extremely, extremely dangerous, because even if you get a good signal, sometimes they just don't respect it. See here, for instance, on the pound dollar on the 15-minute, they have been coming down. They did come down, came back up, retested, came back down, now they're back up. You know, it's all over the place. Now, one thing that I'm noticing here, and this is on the 15-minute, see how they've been buying it here, and then they went short. So here they started to go long and then short, and now they spiked and they're coming back. You know, that's a tricky little one, because this is an outside bar, and what I don't like about the signals here is that they've been really, really bullish on the bearish side. The point of control is at the high point here. They broke through pivots, and again, it just doesn't seem clear. But if we go based on fundamentals, we should have more. Higher employment numbers for the U.S. And if that's the case, then the dollar should get stronger. So based on fundamentals, I'd say short, but don't quote me, because like I said, right now, anything can go. It's a very strange market that we're in right now. You know, yesterday, for instance, I didn't trade the European Central Bank rate announcement, and I'm glad I didn't. I was too tired. It was one short squeeze, because they ripped everyone limb from limb that went short on that trade. So a very, very interesting day that they played. Not the easiest one. Now see, this one already started to go long. You know, the signal's clear. The volume isn't, of course. You can see how they've been playing this. But if I go based on what I see here, you know, they'll come back, use the trend dot and the trend stop to go long. That is what it appears. Doesn't mean necessarily that that's exactly what they're going to do. And this one isn't really clear. Now they've already broken through a resistance level here and here. So they went up, came down, retested, and they're right back up. As this came down, it announced the point of control was at the very top of the candles, and that's why it went long. You know, in this case, if we're guessing, I'd have to guess long on this one. I won't take a position just because the market is just a little too on the weird side, and it's not a really clear signal. If we take a look at the US CAD, and we only got 3 minutes left, so let's make the best of it. This one is, let's see, come on, come on, come on. We only have 2 minutes left. Be nice, be nice, be nice. Oh my God, really? Out of all moments, they're going to do this to us now? There it is. Yeah, see this, showing a short at this particular moment. I don't know. Pivot here. Power dots here. Support level here and pivots here. I'd have to say that the numbers aren't going to be that great based on what I'm seeing. I don't trust it to the downside, quite honestly. I'd say long. But, again, no clear signal. We're basing it off of the fact that they could come down and bounce off of this level or here and then boom, spike. So we have a minute left. Let's see what they're going to do. Because this one is not a clear signal at all. And there it is. We weren't wrong about the direction, now were we? So this one hit. Went from, we positioned it at 133.20, and of course it went to 133.70, 50 pips. Good move. Let's see what the euro did. Employers add 211,000 jobs. So numbers were better than expected. Let's see what the euro looks like. The jobless rate holds at 5.0. Estimates were beaten. Estimates were 200,000 to 201,000. So numbers came in much, much better than expected. And let's see, come on, euro, be nice, be nice. Come on out, wherever you are. So let's see what happens right now. We hit the US CAD right on the money. Long. Now I want to see what the euro did. It didn't do anything, or did it? Let's see. I said short. based on that, but give it a second. Okay. What is going on? It didn't do anything. Are you kidding me? This thing should have fallen through the floor. How despicable is that? Let me remove the volume indicator because that one is taking up too much of our memory. It'll allow us to move a lot faster. Come on, come on, come on, come on. Wow, no movement on the euro. Unless I'm wrong and something's up with the charts. Let's compare. No. What? This thing should have removed itself. Move. Okay. Give it a second. Can't believe that it didn't move. I'm at a loss of words. This thing should have hit the floor. Like if there was no tomorrow. I mean, the US CAD did it. Let's take a look at the pound dollar. Boy, what a disappointment that had to have been for people trading the euro. Okay, the pound dollar did move. We put the marker right there, saying where it was going to go, from 151.40 all the way down to 150.91, 92, 50 pips, not bad. This one did hit the money, and it looks like it's going to continue to come down. I expected it to come down to 150.40 even. So we were able to identify that trade very, very well. Let's take a look at the US yen. We also marked that one right before the announcement. Yep, we hit the marker. Right before the announcement, we marked it. The candle dropped, of course. We looked for an entry here at 122.80, and this thing spiked all the way to 122.71. So it didn't really go much against us, and then it spiked, of course. So from 122.90, where we marked it, we were expecting it to come here. It went to 123.33. Almost a 50 pip move, 45 pips, not bad. Looks like it's going to continue to come up to 123.52. So we were correct in the directions. The first one that we identified, of course, which some of you may have missed, was the US CAD. That one we said long, and of course the numbers came out, and it was a beautiful trade. We were right there when it hit. Yeah, see? We identified the trade right here at 133.20, and of course it jumped to 133.86. No, not not a bad trade. This one has given much more than the others, of course. But again, not easy to predict, because if you noticed, we had to come all the way back here, and as it was coming down, the point of control in the candles, which is basically telling us where their interest in volume was, the buyers were not happy as it was coming down. Now, they announced it here, and they announced it here as well. Even though it was long, they could not take control. The sellers couldn't really take too much control of the trade, and as it was going to come down, because they did hit this trend stop. This was the distraction that people would have seen to go short right before the announcement, and I said no, it's not short, because point of control is here. It's telling us that the buyers are coming in to buy, and they're going to take control as soon as the announcement comes in. So they had an idea, more or less, of what the numbers were going to be, even for Canada. So the numbers were not that great, even in Canada. But like I said, it was a good trade. This one was a great trade. We were able to identify it right on the money before anyone saw it. And most people would have taken this trade short, where we said long. And you can see right there why. They came down to the trend stop, which was here on the 15-minute. Normally the 15-minute will be a good guide. So you can see how they came down. They did the same thing here. Every time that they started to come down, the buyers would come in and basically take control, and they would make that move. Here they never even attempted to go down below the previous day's low. So it was a very interesting outcome. I am shocked, surprised actually, by the euro, that the euro did not do anything. I was expecting the euro to actually collapse, and it didn't out the gate. Very disappointing trade from that perspective. We'll give it a minute, and then we'll go take a look at the E-minis. See, look at that. Didn't move at all. I said short from this point, and the reason why I said that was because, as you can see, they never broke above this level, and what happened here was that you can see how they had been selling it, but here it was just too much resistance. You had too many pivots. You had these power dots that had already formed. They had already come down, so it was more of a retest, and as soon as they pulled back and I saw that, I said, nope, they're going to go, it looks like they're going to go short, and that's exactly what they did. I wouldn't take this trade right now at all, because I don't think it's going to do anything. Far from it. At any point, it could reverse, and I'm probably thinking in the next candle after this one, because this thing should have hit the floor, and it didn't. So anyone trading the euro today, literally, was extremely disappointed. Now, if they were on the wrong side of the trade, then they got nothing to cry about, because this trade didn't harm them at all. Unlike the pound dollar that we identified minutes before the announcement, it didn't really do anything. It moved 50 pips. I was expecting a much bigger move. I'm surprised that the U.S. CAD actually moved more than all of them. See, look at that. We identified this trade short here right before the announcement, and again, not a big move. We're at 51.40 to 50.88. 50 pips. Not a bad trade, but I think a little bit too much risk in that regard. What gave them away was this candle right before the announcement. The point of control was that the sellers were not in agreement in them taking it long any further. Even though they did agree and concede here, they didn't do it here, and they were announcing it here and here earlier as well. So, excuse me, this was a sign that they were getting ready to flip it. And of course, everyone was thinking long. It didn't go long this time. It went short and sort of shocked everyone. As for the US yen, we tagged that one to go long, and that was actually that one they did spike down. No more than 10 pips from where we announced the entry. We announced our entry here as it was trading around 22.90. It came all the way down to 22.70. So that's a 20 pip, retracement. Anyone in that would have gotten more or less stopped out. And of course it recovered, and then it came all the way up to 123.37. So not a bad trade, about 40 pips, but a disappointing morning in regards to the fact that everyone was expecting 150 pip moves, and we didn't see them. And again, what gave this trade away? The sellers basically were conceding to buy at a higher level. This one is the one that did it. This candle here on the 15-minute. I'll explain why. There's an imbalance here of the worst kind, and normally what these dashes are showing is the point of reference where the buyers prefer to buy and the sellers prefer to sell at. So when this candle formed and ended up finishing, you had the sellers basically conceding to sell at a higher price level. You had the buyers, buying at a lower price level. But the fact that the sellers did it and then they did it again here was unique. And then they did it again here right before the announcement. So they were already in agreement. And this is what many people don't understand, that what we're showing, and you can see it here, as this trade is going down, the buyers are announcing that they're going to come in to take control, and they do right at the trend stop. So they use this ATR level, bounced up, but then here, the sellers agreed. And so as they agreed, that's why when I said this doesn't look like it's going to go short, it looks like they're going to come down, but in reality, they're going to go long. And they did. They came down to this level, to this pivot, and then basically bounced back up. So they ran stops before going long. Now, based on this trade right here, you see how this candle just opened right below this one. This is announcing short. This is announcing a retracement here. However, I don't believe that it's going to be one that will actually take place. It'll be short-lived, and more likely they'll continue and come up and retest one more time. Not expecting a big move. Actually, a very disappointing trade for non-farm payroll. Let's take a look at the E-minis and take a look at gold as well. See, look at this. The signal on the 15-minute was very clear right before non-farm payroll for the Dow to go long. Couldn't question it. Why? Well, they had a number of things going. Every time they came short and they went long, the buyers would announce that they were going to come in and take control. Now, normally this gives you a 2-candle warning. After you see the first power dot form, I always tell you, go to the left twice, if not 3 times. 3 candles. Now, this one, even though they conceded, what would have given them away here would have been the volume. But I want you to look at the pattern. See here how this one originally came down, then went up. The buyers pretty much were announcing long. Now, we're going to add the volume indicator, and I want to show you something, because this is where a lot of traders can't see the volume divergence. You'll see it here. It's a great day to actually demonstrate this because of the amount of volume that was injected into the markets. And the reason why you would have taken this trade. Now, let's take a look at this because we're looking for, let's see. Okay, so here is where it happened. This one spiked all the way down and it was an outside bar. Now, granted, they did the same thing here. They came down aggressively, came up, came down again, didn't do much, and then the power dots formed. So realistically, you were looking for volume divergence here. That's one. But number two is that on the numerical side, and we'll stretch this out, that's where you'll see the spike. But now on the numerical side, take a look at this. This is where we differentiate from everyone else because we look at things from a different perspective. Now, I've told you, if you see power dots forming, what you need to do is look and see inside the volume. Look at the volume on this candle with this power dot. And as it came down short, what did the buyers show? The buyers showed discontent to allow this trade to continue to the downside. But look at the high frequency that they did. 341 million on the buy, 353 on the sell. A difference of 12 million. Now that difference of 12 million, I've always told you, is where they show an excessive amount of orders that are not getting filled, and those are the limit orders. Well, now we can understand here why those orders didn't get filled, because this is a zero-sum game. The reason why they didn't get filled is very simple. The buyer's point of control in this candle was here. Even though it was a bearish candle, they were announcing long. Now, when you look to the left, look at how much excessive volume they had here as well. 445 million on the buy, 586 million on the sell, a difference of 141 million. Now, granted, that's a tremendous amount of high-frequency trading and a lot of orders that didn't get filled below 17,508. So, being that said and done, even though their point of control is at the bottom, this candle should have gone through the floor. And this being their previous support level should have ripped right through 17,500, but it didn't. And the reason why is that they were getting set up for non-farm payroll. Now, even though this candle is going short and we're just, doing a simple retracement after this big move, don't think that it's going to be a big one because the buyers are already announcing here that they're eventually going to come in and take control again. So I wouldn't really take this trade at all. Good retracement though, from 17,570 all the way down to 1733. Not bad. 35 points. 35 points for 35 points. Now in this candle, like we said, going to the left, 424 million on the buy, 208 million on the sell. This one had excessive volume. Now granted, it did not go all the way up. You had 216 million in positive volume, but it announced that they were getting ready to take control, giving a 2-candle warning. 1, 2. And then 3 came in and they stopped it. And look at the amount of volume they brought in. 475 on the buy, 438 on the sell, a difference of 37 million. That is excessive. The sellers, of course, were not in agreement. So you could say this is a 1, 2 candle warning before going short. However, the real trade was this one. But look at the volume here. You had 670 on the buy, 673 on the sell, difference of 3 million. And they both agreed to open at a higher point of control than the previous one. So that was pretty much the giveaway. The volume divergence was here, very clear here at the bottom. And so they made that move. And they went from 17,517 all the way to 17,580. That's not a bad move. That's about 65 points. Anyone 65, 70 points on a trade, you would have done very well for yourself. Again, a very disappointing morning in that regard, because I guess we were all expecting much more to happen. And I would have expected at least 150 to 200 point move on the Dow to the upside. So something's up as to why they did not make that move. Let's take a look at the DAX real quickly. I'm sure that DAX is probably going to show us the same thing. Again, very disappointing. Look at that. You had a signal on the 15-minute. And you did have volume divergence here again. Now, granted, as it came down, they more or less did give you a two-candle warning. 1, 2, and then boom. But you're going to see it with the volume. And this is a very simple pattern that these guys follow. They don't make that mistake. Look at how much volume they threw into this. I mean, this is high frequency at its best. 1001, and that's in the millions. So that's 1 billion that they threw in on the buy side, and 1.12 billion on the negative, a difference of 119 million. That's 119 million that should have driven this candle and price action all the way down. That's an excessive amount of volume, and it didn't. The way we read it is different than everyone, because I'm asking you to look at it from a different perspective. Just because there's more negative volume does not necessarily mean that that is a direction they're going to go. No, what that means is that those are orders that did not get filled by the buyers, because the buyers were going to come in and take control. So, as I always mention, go to the left, 2 candles, if not 3. What did they show here? Now, as they came down, the buyers were not really content. But look at the amount of high frequency that they threw into this. 1,051 on the buy, 1,188 on the sell, 137 million. And again, that's an excessive amount of high frequency trading, because they needed to rebalance their order book, knowing that the numbers were going to come out positive. And so they didn't fill those orders. Here, the buyers came in, flexed their muscle a little bit, didn't really do much, and came down. It's not until here is where it really matters to look at the point of control, or the commitment of traders, if you want to call it that, in the candles. In this case, as they were coming down, this is the one that basically showed, number 1, a decrease in volume on the seller side. That's huge. And number 2 is that they held, even though they came down here, and again, they did more high frequency. What was the problem with this candle? They had an excess of 439 million on negative volume that didn't get filled, and that's why they didn't break below 10,669. This is very significant information, because right before the announcement, if you see this, then you want to know exactly what type of power play they're going to do. Now, this next candle, they did the same thing, more or less balanced out, but usually you'll see right before a trade that they will come in and they will throw the kitchen sink, at least on this case, the sellers. Now, very difficult to see where volume divergence really takes place, but in this case, the minute that this candle formed and the fact that they came down here, this is where you should have seen it. This is where it would have mattered. And so that is why it makes a lot more sense when you look at that, as to see, why is this so important? Why is this why does this matter? Well, it matters because our algorithm, which are the power dots, announced that they have to rebalance their order book because there's a trade coming. Remember, 3 components are announced here: volume, momentum, and liquidity. And if you can understand that every time power dots form, that's exactly what's going to happen, then you're not going to be surprised when the trade hits. And usually they'll give you, it'll hit on the fourth or fifth candle on the 15-minute, which is exactly what it did here. If we go to the smaller time frames, and we can go in this case to a 7-minute, the 7 minutes actually become a real player. Most traders don't even consider looking at the 7-minute. Now here on the 7, we don't have power dots, but we do have volume divergence. It's even more clear. We do have power dots here. So this trade is to the downside. And that's why I said, very disappointed in the trade itself. But I guess now we're seeing where it's heading. And now you have a pivot right under the power dots here. So, but if we look at the volume here, this is where it would have made a difference. Remember, here's where we saw them make their mistake. Look at how much excessive volume they had in this candle, 445 million, and you're not going to go through the floor? That's the illogical side of this explanation. That's where people can't wrap their head around it. But what I'm asking you to do is to think the way they have programmed this. I want you to think as if you were the institutional trader. And as a retail trader, it's very hard for us to develop an institutional mindset because we've never really been exposed to it. But what was the problem with this candle? This candle, there is an anomaly of the worst kind. It's called an imbalance in the candle. You have, as it came down, the buyers announced up here that they were not in agreement with this trade to go short any further and that they were going to give a 2-candle warning. The sellers were, but the buyers weren't. This is a true imbalance. This is the secret of the sauce. This, if you see this on a 5, a 7, a 10, a 15-minute, or a higher time frame, you know that what's going to happen is that the buyers are going to come in and they're going to eventually take control. Now, granted, here they threw the kitchen sink in volume, but look at this one here. Here the buyers came in and took control. Now, granted, they didn't, they slowed the trade down, which is what they were supposed to do, because they were not going to allow the trade to go down any further. Now, even though they broke these power dots here, it didn't matter. The 15-minute was the one that you should have been looking at because that's where we had power dots form here at this price level. So the fact that they broke through, but the volume sort of told you they're going to slow it down, this is where the divergence comes in. And so every time that it moves, number one, you see the volume decrease and you see an increase on the seller side to try and offset, but it's not happening. And then finally, this one, right before the announcement, this is the one that gave them away. They pulled in, and granted, they did give a fair warning, 2 candles, 1, 2, before shorting, and you can see the power dots here. However, as they were coming down, this is a bearish candle here, but the buyers are announcing long. They're announcing long here, and they're announcing long here. I'm not that keen on going short any further on this trade. If anything, as an example, 1 second. Okay, so see how this is coming down now? This is the last of it. I don't think that it'll go down any further. Now, what I'm waiting for is the spike. There has to be a spike to the downside on this one. what is this candle showing here? Excessive amount of bearish volume. Excessive amount of bearish volume. And they're hitting a support level. So if this thing doesn't, if they don't fill those orders to the downside and the point of control doesn't change and come to the middle, this trade should go right back up. But again, this is not a trade that normally, this trade is one that I would have taken, and this one for sure. So when you look at this one right before the release of the news, you know, this one really gave it away, because here's where they came in and basically stopped the trade to the downside and made that move. Now, granted, you had an imbalance in the candle here, which more or less guaranteed that the buyers were going to come in and take control. Here, of course, it's a little different. Now, here the buyers have conceded to buy, the sellers have conceded. Here the sellers are selling at a higher price, the buyers are buying at a lower price. This is also an imbalance. And when you see this type of imbalance in a bearish candle, you better pay attention to it, because they're going to get ready to flip as well. Just not yet. I'm not that keen on on taking this trade quite yet. But if we go to the smaller time frames, you'll see, let's go to a 5-minute on this one. Who knows, we might be able to catch the DAX off guard. Yeah, see here on the 5-minute, see how they're announcing long here. Even though they're going short, they're announcing it. Here, again, here they've conceded, but look at the volume divergence. Each time it's settling higher and higher. If this candle settles above the 50% line right here, then guess what? The next candle should go long. I would, at this point, based on where it's at, yeah, I could say, let me see how many minutes, 2 minutes left in this candle. I'll wait 1 more minute to see how it continues. If they break through the floor, then I'm not interested anymore. But if they hold, and you got 2 pivots here, 1, 2, that's a significant support level. So let's give it a sec. Let's see. Come on down, test the floor. Oh, they're really pushing it. Oh no, they came down. See, that's why I would not have jumped in on that trade, because I wasn't that keen on it. Not yet, at least. But let's see. Ooh, they changed. They're holding. And let's see the volume now. Ah, power dot. Now, don't like the way it formed here, to be quite honest with you, because we had a previous level here on the Dow, but we are seeing that they are interested in going long here. Now that means that from my entry, my stop loss would be right below this target, 106.50. But I'm thinking long, because they've been announcing long all the way down. They were just waiting to basically set this trade up here. So from this point, we're up 5 ticks, 5 points. Let's see. I don't expect a big retracement on this one, but it should be a decent one. Right back up. And the fact that they formed a power dot, and the fact that volume divergence is still in play, that to me is very significant. You see, they've just continued. So from this point on, if we have another power dot form here, then this trade is more or less pretty much set in stone. And we should see a good retracement. If it comes right back up to 106.95, I'm out. I don't have anything else to do at that point. But my risk would not exceed more than 10 points here. That would be the most. Let's see how they shake off everybody. And you can see how the volume's coming in. You got 356 on the buy, 262 on the sell. A difference of 91 now. Excessive volume not getting filled is not a good thing in this case, and we don't like when they do that. However, the fact that they're holding it and establishing a support level here is somewhat significant, so I want to make sure that that support level is completely established. Not holding. Oops. Crude came down from 41 to 39 something. Not a good thing. Missed that trade. No, you do not. Yes, yeah, I won't let this go any further. I'll take a brief loss on this one here. Boy, they really sucked it to me on this one. I was expecting them to retrace here. And they are not playing fair today. But I'm going to come back slightly. This may be the last candle to the downside. Let's see the volume on this. They're really trading aggressively on this one. But they've got more excessive volume on the downside that's not getting filled now, so this could be the retracement that I was looking for. Let's see if this thing closes at right where this power dot formed or close to our entry, and there it is. Okay, so let's see. This candle has to come up now. This might be the one. I may have been a little bit premature in my entry. There it is, right back to break even again. Now let's see if they really make a run to the upside, because it would have to happen here. No, seems like they're not. And see, they're trading right at, this is where my entry was, right where this pivot is, but it doesn't seem like they're going to play it. Not a lot of volume at this particular moment. The volume is, but price action, they're driving it down. So let's see what they do. It's more or less evenly balanced at this point. But, as I said, not. This is the moment where they'd have to really come in with a real amount of liquidity to drive this thing up. And again, this is where I'm looking for divergence to the upside. If this bar settles above the 50% line, as this one spiked, then I should anticipate or expect this to come up even higher. So let's see. There it is. Come on, baby. Make the move. Now this candle still has 3 minutes, so we should anticipate another power dot forming right here. Excuse me. And see, it didn't make sense that they would not reverse because the buyers in each candle are announcing that they're going to come in to take control. This is the one that would have given a 2-candle warning, 1, 2, and then this one would be the move. I got in prematurely based on this one. I was expecting this one to be, and then after this one, that this would be the 1, 2. I got in here, but now this is where the trade is actually playing in. Any questions? No questions? Should we go take a look at crude? Should we wait this one out and see how far it goes? Because if it breaks above this pivot, then at that point we know it'll run. And this is 10,673. Remember, the pivots are there for one thing, to guide you once the trade goes directional, what the next target will be. So if it breaks above this price, then this is the next one, 10,706. Question? Yeah, we'll take a look at crude in a minute. Oops. Now there was a move. Now, what I don't like about this trade is you see how the trend dots are still here? I think that they may use the trend dot as a resistance and then come down. This trade would have to excessively go above 10.0690 in order for me to stay in it. And it only has a minute left. If it doesn't, the next candle will more than likely retrace right back down. So that's one of the signs that you also have to look for, is to see how the angle, if the angle is very, very aggressive to the downside, then you better pay attention to it. See, there it is. That's why I said they could use it as a resistance level and come right back down. So let's see if this one goes, and I don't think it's going to go any further, because if it does, it has to do it right here and now. No, it's not going to do it. No, better to get out with what you can get. Let's take a look at crude real quickly. I'm afraid we missed that trade on crude. We missed the trade. It already came down. How despicable. Oh boy, this 41 from 41.92 to 39.80. That's not a bad move. That's a dollar move. Hate when they do that. But let's take a look at it and see why. This one's a real tricky one. I don't think I would have taken this one, quite honestly. I'd like to see this one in the higher time frame. I'll look at it on a 10-minute. No, there's no recovery. So let's see. It announced it here. See, here's the tricky part. This one did announce long, but it didn't play, and they pulled back. So the volume has to be a major component here to really throw them off. Where is the data box? Here it is. Let's take a look at this. See, based on the power dots here, this wasn't wrong. This did go long, but they did use the trend stop here to go short. And as they were coming up, I mean, look at how much volume they threw into this. They threw the kitchen sink at this. This is a sign. I would have preferred if the power dots were up here. To be quite honest with you, it would have been a much safer trade. Here at this point, even though they had a tremendous amount of high frequency and they threw the kitchen sink at it to the upside, it didn't play. And as for this candle, even more, and they didn't play right before the announcement. Here's where the announcement came in at as soon as this one closed. The volume decreased significantly. Not today. I will watch. So here, for instance, this is where it becomes interesting because now we're looking at an excessive amount of volume and a decrease to the upside, right? Right before the announcement. And so then, of course, expectations are that it would come down, and it did. It was a pretty decent trade, to be quite honest with you. A dollar move in crude is a dollar move in crude. But at this point, would I go long here? No, I'm still thinking this might go short even further because even though this is announcing long, this is the imbalance that I talk about. 2 candle warning, 1, 2, but every time in this case, the point of control was at the very bottom of the candles, and they both agreed, both buyers and sellers. Even though this one came in and they held it here, and let's see how the volume comes in on these. This is going to be the interesting part. Look at this. I mean, they threw the kitchen sink at this. 7,755 on the buy, 10,305 on the sell. A difference of 2.5 billion on this thing to the downside, and it did come down. Here, the volume increased even more, doubled than the previous candle. And they had excessive volume to the downside that didn't get filled, 1,842 on the negative. Then this one comes in, and the volume more or less is sustained, more negative volume, 3,566 on the sell side that did not get filled. And now, this is a bullish candle with bearish volume. That is not a good sign. That tells me this thing could come down again. So I would have expected more bullish volume here. Here, even though there is bullish volume, I'm not that satisfied with it because as this was coming down, the point of control for the buyer should have been in the middle or at the very top of the candles, and it wasn't. That makes this a dangerous trade. So I would not be that keen on going. We have an announcement by OPEC in about 40 minutes. Okay. Sounds good. So, let's see. Yeah, I know you guys are spoiled in Phoenix, buddy. So I wouldn't really be jumping in on this one right now. I'd be holding off. Let's take a look at gold real quickly. Gold made a move to the upside. I wouldn't have seen this trade. It didn't make sense at all. I would have probably stayed away from it. Let's take a look at the pound New Zealand. You know, the pound New Zealand, the pound Aussie on the FX side are very interesting pairs because they move aggressively. And not that many people pay attention to them. So it's a little different in that regard. But I have to admit, non-farm payroll was favorable to us today. Because the previous ones, it was nasty. So give me a minute. I will be right back. I'll leave you guys with this chart so you guys can take a look at it. Yeah, see, this is right before the announcement. And then, boom, spike, and now come right back down. Not a trade that I would have really been keen on. I'll be right back, guys. Hold on. Oops, so sorry. I didn't finish muting. So this trade here, as this was going up, let me explain again, forgive me. As this was going up, you have the point of control of the sellers at the bottom, middle, or bottom of this candle. They're also showing the same thing. This one pretty much gives a 2-candle warning. 1, 2. Now, the volume decreases each time in these candles as it goes up. And you can see how they start to settle here in the volume indicator right below. So this actually shows you, gives you the visual of the volume divergence taking place. Now, I know that what I'm asking you to look at is not easy to swallow, because it's not. You know, I'm asking you to think outside the box, and I'm giving you a toolkit that makes you think outside the box, but makes you think the way that the banks have programmed their programs and algorithms. And that is what will give you the edge. Without it, it'll be very difficult. Now, in the chat, I had posted, and I'll post my email again, because some of you will have questions, and that's okay. I will respond to them as I am able. So my email is ricardo@phoenixtradingstrategies.com. My telephone number is 818-431-1357. And my Skype, if you're out of the US and don't want to call me, you can reach me through Skype, ricardo@pfg. So it's my name, Ricardo, then ATPFG. That's my Skype name. You can reach me there. So I was going for 10 to 15 pips on this trade. Now, the reason why I took it and I entered here is because I saw that they were going to make that move down. I don't expect a big move here, and I don't expect a tremendous retracement. I'll explain why. This trade never really came down the way it should. We caught it here, and we caught it on the 15-minute right before it came down, and it didn't move much. Quite honestly, it was very disappointing. 20 pips, during non-farm payroll, are you kidding me? I would, kick someone to trade. So the original trade was not a good one. This one, on the other hand, may be the one that we're looking for. So we'll see. It'll be very, very interesting from this perspective, because I believe that this might be the trade that we were expecting and looking for. I would have expected a much bigger move right now. Unfortunately, just can't really see anything happening at this point. So 15 pips, that's really what I said it was going to do, not more than that. But let's give it a moment. I'm thinking it may come down based on what OPEC may have to say, and maybe that's why they held back from actually coming down. Sometimes they could be really despicable and keep everyone on the edge and out of the trade before the trade actually takes place. The fact that it came down and that it broke through the trend dot right now is somewhat significant. However, it's bounced off right here where you have these pivots, 2 pivots, 3 pivots, and power dots. That's a significant support level. And if it doesn't go below it any further, it's not. Now we also have another problem. See how the trend stop just turned? That means that they could be going long from here. But I'm waiting to see how they're going to play out, and I don't expect them to go long too fast. So we still may be in the right direction. Now, if you did get in on this trade where I placed it, your stop loss should be here at 109.30. Don't expose more than 8 pips on this trade. But at this point, I don't think they're going to give us what we want. So I'm going to wait just a tad. And if it doesn't play, then it doesn't play. It is what it is. No, it's not going to play. How disappointing. Yeah, I said 10, 15 pips. No, I'm out. I'm not going to wait for it any further. I was expecting it to break below this level and come down here, but it didn't give. So don't want to take the risk any further at this point. Any questions? Okie dokie. So let's take a look at the pound, see what the pound did. And then, actually, let's take a look at the pound yen. That's an interesting one. It never does what it should. And I don't know if I would have traded that one, quite honestly. Let's give it a minute. Hits the volume indicator. Takes up a tremendous amount of memory. But we'll get there. We will get there. This ain't over. No, 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 not at all. You know, everyone's expecting OPEC to really just break oil today. And if they do, we're going to have lower gas prices. Now here in California, that means a lot. In Arizona, doesn't mean anything. So here, for instance, give it a second. Let's see. Come on. Give it up. That's too much. Okay, so let's see this one. This one says long. Go figure. However, the sellers say no, short. They hit this point here. Is there anything here that we're missing, that we're not seeing? Not really. Pound yen. You know, this one's always a strange pair during non-farm payroll. I don't like trading it during NFP because it doesn't give a clear signal. It's all over the place. And today it's all over the place. Would I have taken the trade here? No. I didn't have a signal. This was a good trade, and this is a good signal, but I think short-lived. I think that it's from this point they're announcing, you know, to come back down. The trend stop is saying down, but I'm not sold on it. So no, I wouldn't necessarily take it. Let's take a look at the CAD. CAD was such a good trade for us today, this morning. Good signal. But it has to be also announcing something regarding oil. Something's up. Okay, oh look, it moved even higher than where we left. I mean, it originally did a 60, 70 pip move, and then it went even higher. So this one did a 100 pip move to the upside. We called this one right on the money. But now, of course, it's coming down. And will it stay down? See, this could be them taking a position ready for OPEC. The OPEC announcement coming up in about 20 minutes. but I don't know. Normally after the NFP announcement, there aren't that many trades after that. Liquidity sort of diminishes in the market, not volume, liquidity. And that means lack of price action. So I don't think that we're going to be able to find anything else. Unless you guys would like me to look at something in particular, this would be the moment. You guys want to look at the Russell or any currency pair? Let's take a look at the Russell real quickly. See if we would have found a good signal on that one. Excuse me. No, this one would have been a real tricky little sucker, especially at the announcement. I would not have taken this trade to go along. Then it came short, of course, and now it's right back up. Go figure. So let's see what the Dow did, because we did see the Dow go long originally. Ooh. Yeah, see, we did see this one make a move up, and then it came right back down. Now it's right back up. Wow. That's a roller coaster. Did they announce? Yes. Here. 2-candle warning. 1, 2. Boom. To the upside. Are they announcing a short here? Not at all. In no way. Far from it. This thing should go higher. And I'm only saying that because the employment numbers were really, really good. Bottom line. So, yeah, anyone that was in this trade to the downside was short-lived because everything is to the upside right now. Good trade, I have to admit. At the beginning, there wasn't much action, but I don't believe that we have a trade here at all. See, look at that. Oh yeah, they're gonna run this thing to the hill. Look at that. They came down to 17,450, and they're at 17,595, almost 17,600. Yeah, that's 150 points. Oh yeah, they're definitely going to make the move, especially after yesterday's drop. They should really make a move at least 300 points today to the upside. But it's Friday, and OPEC hasn't come out yet. We may see a surprise. Don't know what OPEC has in mind. Let's see if we can see that trade setup on that on crude. That would be interesting. Give it a minute. No. No, I wouldn't touch this trade. No clear line of sight on this one, whether it's going to go down. And with the stock market going up, that means that oil could recover to the upside just as much. I wouldn't touch it, not until the announcement. So I don't really have much more to show you guys, unless you guys have questions, then by all means, let's hear them. But if not, I think that we had a pretty decent session today, actually, for non-farm payroll. So unless we have anything else, I will see you guys Monday morning. Again, 9 a.m. Eastern Time. And again, if you have any questions, let me put my email in, ricardo@phoenixtradingstrategies.com. Give me a call. Send me an email. My number, 818-431-1357. And that's all that I have for you guys today this morning. Thank you for joining us here at Phoenix Trading Strategies for non-farm payroll. It was a great morning, I have to admit. I think we're all very pleased with the, yes, Rich, Monday, with the results and with how the technology that we've developed is basically forecasting these trades ahead of the market. So thank you. Have a great day. Have a great weekend, and we will see you Monday morning. All the best. Bye-bye now.